Money.com and CNN released a report this week about the top hot spots for buying rental properties, and Tampa cracked the list, which is pretty impressive considering all the challenges our real estate market has gone through the last few years. That many of the so-called experts are now, focusing on telling people it's time to buy investment property in Tampa. I think they're probably a year too late, a lot of them, because anytime you start hearing the press talking about it's time to buy rental properties or investment properties in a market, they're behind. They missed it, and that doesn't mean you can't still get good deals out there, but it's getting harder and harder and harder for investors to find good deals on distressed properties. We represent an investor that buys homes for resale. They fix up and rehabilitate the home, and it's getting harder and harder to find decent inventory. But I found it interesting that we're a top hot spot according to Money.com for buying rental properties. We are number 10, they estimated projected annual rents and estimated median home prices were that it's a great time to buy a rental property because you can make a better return than you're getting on Wall Street or in any of the guaranteed. Not any of the guaranteed investments, but a lot of the guaranteed investments. So I thought that was interesting. If you're looking for rental property out there, definitely playing for a lot of competition. I mean, we buy rental property, and we have a lot of clients that do. And in some of these targeted neighborhoods, Carrollwood, West Chase, South Tampa, Fish Hawk, even over close to the beaches and certain price points, it goes on the market, and it's almost like an unofficial auction. Anything in certain price ranges, it's just astronomical. And speaking of buying rental properties, Richard, what do people need to look out for if they're buying rental properties and insuring rental properties? What are some of the differences between insuring a rental property versus insuring your primary residence?
Well, it's funny that you brought this up because I'm always looking out there for good deals and keeping my eye on the rental market. And lately, it seems like I'm always a day late and a dollar short every time I find something.
It's really tough.
Yeah, there's a contract on it, with sometimes even a backup. But a lot of different things that you should look at. Number one, the age of the house is a big factor. The older a house is, the more it's going to cost to insure. So if you can find a house built in the 90s or built in the 2000s. A lot of times you can buy, insurance for a larger house built in the 90s or the 2000s cheaper than you can even get insurance for a smaller house built in the 50s or 60s. So the age of the house is the biggest factor. The second biggest factor you want to look at is the roof. And keep in mind that insurance companies don't want to insure houses if that roof goes over that 20-year-old mark. So, that's definitely something to look at. And if you walk up to the house and you look up there and you see shingles that are curling up, or shingles that are missing,
or no shingles,
right? then that's going to be a very big factor, and you really need to figure that into to your calculations, because you may need to replace that roof before you can find decent insurance on it.
Yeah, and I'll tell you, I think that the key to understanding the differences are, you're obviously not worrying about the contents that's going to be on the tenant.
Right.
You're not, your deductibles may be a little bit different. Your coverage may be a little bit different depending on how you have it structured and then how you have it titled. Do you own it in your individual name? Do you own it in an LLC or a trust? So some of that has an impact too.
Right, and just remember that you need to get an insurance policy that's specific for a rental property. And I run into this all the time where people give us a call and they're asking about insurance on a property, and we ask them, what are you going to be using that house for? And they're kind of evasive, they're kind of beating around the bush, and then I tell them, well, listen, if it's a rental house,
right,
it should be cheaper than if it's your primary home. Then all of a sudden
they want to tell you,
yeah, oh yeah, we're going to be renting it out. So keep in mind that go ahead and let them know that it's going to be a rental house, that you're going to be renting it out, because the insurance should be cheaper because we don't have to insure all the contents and the furniture and everything else inside the house. So that's a big chunk that it's going to save.